Good morning, traders. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Let's familiarize ourselves with the disclaimer that states that the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry, I'm here to help you look at the markets the right way. I would want us to start by looking at the demo contest where...
What if you could prove your trading skills with zero risk and real rewards? Welcome to a virtual to real demo contest where traders compete in a risk-free demo environment, but the winners walk away with real trading capital. Every month, traders from all levels showcase their skills, climb the leaderboard, and compete for exclusive rewards, including our signature crystal obelisk and powerful trading bonuses. First place gets $500 credited. Second place gets $300 credited. Third place gets to be credited $100. This is where virtual trading meets real opportunity. Trade smart, trade discipline, and turn your demo performance into something real. Join the virtual to real demo contest today, only with HFM.
Indeed, the virtual to demo contest is currently ongoing and the rankings have been updated for January, where Evans Kiburi, congratulations, with a gain of 16,000 growth on their account. Number one shall receive the crystal obelisk and shall be credited $500 into their accounts. The second winner is Emmanuel Mwenda. Congratulations to you, with a gain of 11,000%, shall be credited $300 onto the account. And number three, with a gain of 6,900, Titus Chebon, shall be credited $100. Currently, at the moment, we have the February rankings being updated. We do have Eric Wambugu up 3,000% on his account, and the competition is really stiff. You can start participating in the live, into the virtual to real demo contest, whereby it is a risk-free environment. And at the end, if you do happen to be on the leaderboard, number 1, 2, and 3 shall be credited onto their accounts. I would want to look at the events that we currently do have ongoing under Migori. It is your time. We shall be at Hotel Vana today and tomorrow from 11 a.m. till 2 p.m. Once again, Migori at the Hotel Vana. Kindly purpose to attend. I would want to switch gears, start the morning market call by looking at the HFM economic calendar. We did have news release coming out for the New Zealand dollar. This was 45 minutes past midnight, where the unemployment numbers were released. If we look at the information, the unemployment rate did tick to the upper side, up to 5.4%. The underutilization rate did increase to 13%. The employment rate does stand at 66.7%, and the annual wage inflation was at 2%, and the average ordinary time hourly earnings was 43.99 New Zealand dollars. Now, looking at the information, they did see higher levels of engagement, but they were the unemployment rate did tick to the upper side, signaling that yes, indeed, we are looking at negative numbers in the New Zealand economy. I have a question from Broish. How can I join? How can you join what, my brother? If you're looking at the virtual to real demo contest, go over to the promotion segment on our HFM platform, click join now. It is going to take you to a segment whereby you have an opportunity to open the demo account. Now, going back to the economic calendar, we did have PMI numbers, which is the Purchasing Managers Index numbers, coming out for the Chinese yuan at exactly 4:45 a.m. today, whereby we did see the numbers coming out better than anticipated at 52.3 compared to the previous number of 52 and a forecast of 51.8. Looking at the information, if we do click on the data, we have seen stronger upturn in activity as new business growth does accelerate. Staffing levels are increasing for the first time in 6 months, and cost pressures is at the start of the year. This signals that yes, indeed, data for the Chinese yuan or the Chinese economy is coming out better than anticipated. We shall look at a chart of USD CNH. What do we need to look out for in the charts as a result? Going back to the economic calendar, it's going to be a relatively quiet London session up until 1 p.m. Nairobi time, whereby we do anticipate inflationary numbers coming out for the euro. We do anticipate numbers coming out, and we'll want to pay attention to the core CPI, the year-on-year release, whereby the previous number does stand at 2.3% to be exact. A forecast of 2.3 is anticipated. The actual number shall be released at that particular moment in time. If the data does come out greater than 2.3, we do anticipate the euro to strengthen as a result. But if the data does come out lesser than 2.3, we do anticipate the euro to weaken. Once again, we shall look at a chart of euro USD, euro Japanese yen. What shall we anticipate as traders? Over to New York session, we are going to have the ADP employment change. Now, this is usually for the private sector, where the previous number is 41,000. We are looking at numbers coming out better than anticipated at 48,000. The actual number has not yet been released. And we are going to conclude with ISF PMI. Now, this is usually a forward-looking indicator whereby it's the Purchasing Managers Index. This index looks at how the manufacturing sector, essentially they are going to ask these people based on how many new orders are in the market currently for the moment. Now, if the data does come out greater than 50, it usually means that the economy is generally expanding, which is anticipated to be bullish for the dollar. Whereas if the data comes out below 50, we do anticipate the economy to contract, which is usually seen as negative for the United States dollar. Now, as per the title of the morning market call, we are currently coming out of a US government shutdown. And if we can reflect what happened the last year, whereby the government did shut down for the longest period, more than 40 days, and afterwards we did get a backlog of data that we were supposed to receive. Now, considering this week is the first week, trading week of February, we were anticipating non-farm payrolls to come out on Friday, but as a result of the government shutdown, the data is going to be prolonged, and we want to look at this information. How is this going to affect us as traders? But I would want to look at earnings first before we do head over to the segment of the government shutdown. Today, we are anticipating Alphabet to release its earnings. This is the parent company for Google, where the earnings is going to come out after the market does close. We do anticipate the data to come out at $10.6 on the earnings per share. This is going to affect price action, especially the Nasdaq, considering yesterday we did receive information and a report from AMD, where AMD did post the best profit yet on the fourth quarter. They did make more than $10.3 billion, quite an interesting amount. If we can reflect on the table here, whereby the year-on-year release, the earnings per share did move up almost 217%. Quite interesting, noting that yes, indeed, the AI demand is still quite huge in terms of the chip manufacturing sector. And we do anticipate as a result of these positive news releases, investors are going to be more confident in adding more money into the AI sector, which means we are going to reflect on better prices on the Nasdaq and the S&P 500 as a result. Once again, looking at the fourth quarter, they did make more than 10.3 billion. Their net income was 1.5 billion, and the diluted earnings per share was 0.92, based on the non-general accepted accounting principles. Now, looking at the information once again, why is this important? Because AMD accounts for more than 4% of the Nasdaq. If this one company is going to post better than anticipated profits, we do anticipate the Nasdaq also to reflect positive gains. I would want to look at now the highlight, the topic, and the elephant in the room, the government shutdown that we are currently seeing at the moment. But yesterday, President Trump did sign a massive funding bill to end the partial government shutdown, bringing an end to the standoff after 4 days with a new fight over the immigration. Essentially, this is the ICE. Now, Wangai, beautiful. Good morning to you too. Now, they did vote with a majority of 217 to 14, with the 21 Republicans and 21 Democrats crossing the aisle, getting the bill across the finish line, presented some challenges for the Speaker, Mike Johnson. But looking at this information, what does this mean? Yesterday, once again, Trump signed HR 7148, which is the Consolidated Appropriations Act, which ends the partial shutdown, bringing employees back to work and reopens all affected government functions. But we want to look at the information. What does this mean for the non-farm payroll? Now, usually the data is compiled before the end of the month. which was January 30th. But looking at the 4-day delay, they didn't have enough time to compile the data. As a result, we do anticipate NFP to be delayed slightly. We have not received an official confirmation from the Bureau of Labor Statistics where when the data is going to be released. Now, currently at the moment, we were anticipating NFP to come out this Friday, but there's a probability it's going to be delayed. Most probably, there is a likelihood it shall come out next week. Now, looking at this information, also the commitment of traders is anticipated to be delayed when you look at the economic calendar, which is usually updated. And I was looking really forward to digesting this week's data, looking at how gold institutions were trading gold prices. We usually receive the commitment of traders report being updated at exactly 2300 hours and 30 on Friday evening. But as a result, there's a possibility this data could be delayed up to next week. Now, looking at the information, we are going to be driving and trading on the blind side of the markets where we were anticipating to see what is the employment situation in the United States, which is the new data that the Fed Reserve were looking for them to justify. Could we see as interest rate cuts as early as June of 17th? Now, with the information that we are receiving currently at the moment, some segments of the government is going to be reopened, but this is going to be a short-term remedy to the underlying situation, whereby when you look at the Department of Justice and where they are anticipated, this is going to be a short-term reopening of the government up until February the 13th, whereby we do anticipate also the Senate to come back down to the table and vote again for what could potentially happen. But the key word here is NFP is going to be delayed. We are not going to have NFP this Friday as we had initially anticipated. If you look at the economic calendar, usually it comes out at 4:30, but we are only receiving information for the Canadian dollar, whereby they're going to release their employment numbers. But for the United States economy, we are not going to receive the non-farm payroll. I would want to look at the profit leaders. This is one of the promotions that we have just launched recently, whereby it did begin on 2nd of January till 28th of February, and this is going to be round one. Throughout the year, we are going to anticipate more rounds coming up. And looking at the leaderboard, quite interesting. We do have Shital, who has a profit and loss account of 10,758. How does this promotion work? You're going to have an opportunity to have the highest P&L. Whoever closes the account with the largest P&L takes the crown. There's going to be three winners. $6,500 prize pool, where number one is going to be credited $5,000. If you look at it in Kenyan shillings, this is more than 650,000 Kenyan shillings. Number two is going to be credited $1,000, and number three is going to be credited $500. Terms and conditions do apply. Click register now and join the challenge. But looking at the leaderboard once again, number two has 7,462, and once again this is dollars, okay? And number three has 2,862.77 P&L currently at the moment. If you do happen to deposit, if you have the highest P&L being closed, you have an opportunity to make money in your account, and also HFM is going to add more onto your account. Doug, good morning to you too, sir. If you have any assets that you'll want me to look into, this is the perfect time for you to share with me the assets in the chat section. I am going to start with the precious metal gold, where yesterday we were looking at interesting price action ever since 2nd of February. Now, considering today's Wednesday, this was Monday. Monday did move to the downside aggressively, but closed almost where prices did open. Yesterday, we did see movement, massive opportunities in the markets during Asian session, but the entire London session and the entire New York session, we did have consolidation. During Asian session today also, we did have a big spike to the upper side. If you can just put it into perspective, ever since the opening price of the day till where we are currently at the moment, gold prices is more than 2.47% to the upper side. This is more than 1,200 pips. Now we have to look at the key drivers that drive gold. What pushes gold? And essentially, gold is a sensitive asset. Basically, it operates on fear and greed. Whenever there's fear in the market, gold usually moves up. Whenever there's greed in the market, gold usually moves down. Now, we are looking at the government shutdown. Yes, indeed, we are seeing a partial opening of the government, but in some segments of the government, it is still going to be closed, and we are going to have delay on data. But once again, it still stands that there is a split between the Democrats and the Republicans currently at the moment. Now, gold yesterday did consolidate because the dollar wasn't that active, but today we are seeing prices moving to the upper side. We were looking at this Fibonacci level. Currently, at the moment, as it does stand, this level is invalidated, but we did break above $5,000 an ounce, which was the region we were looking at yesterday. We did anticipate if we have a breakout to the upper side, which we are seeing currently at the moment, a retest on that particular region, I would anticipate gold to move further to the upper side. Potentially, the next target could be $5,200 an ounce on gold in the near future. But on the other hand, if we do come and close below the opening price of today, which could be highly unlikely, but there is always that possibility that gold prices could move to the downside. If we do break below $5,000 an ounce, I will consider looking at shorting opportunities, potentially for prices to come back to the opening price of the daily candle. I have an inquiry from Ami. Where do I contact you? DMs. You can find me at the Oval Building, Nairobi. That's where you can find me. Okay. Edu Tupac, Euro JPY, beautiful. Let's look at Euro Japanese yen. Now we are anticipating information today for the euro. If I can just take you back to the economic calendar. We are anticipating inflationary numbers coming out today, whereby we will want to pay. It's going to be in the next 2 hours, 39 minutes on counting, where the previous number does stand at 2.3%. Once again, if the data does come out greater than 2.3%, now usually before news releases, we tend to see the markets consolidate. It is something that the markets usually tend to do as the markets are waiting for the information to come out and then pricing accordingly. Now, looking at the data, if the inflation does pick up, if the data does come out greater than 2.3%, we anticipate Euro JPY to move to the upper side. But if the data does come out lower than 2.3%, we do anticipate the markets to go to the downside. Now, currently, ever since Asian session, we are seeing the markets already did move aggressively to the upper side. Yes, we can anticipate the markets already pricing in that information. Yesterday, we did have, actually today, just on the first candlestick of the trading day, we did have the 50-period moving average having a crossover, whereby the 200 went below, the 50 went in between price action, and we are seeing massive momentum to the upper side. This will be considered the markets already pricing in the information that we are supposed to receive in the next 2 hours and counting on euro. But once again, inflationary numbers is going to be really crucial. What I would want to do is wait for the data to come out and then make an informed decision as a result. Capello, thank you for the follow. Now, looking at the euro USD, which is positively correlated to more or less correlated to euro Japanese yen, because it is the euro being the base currency. Yesterday we did have a ranging market on euro, but we did see the markets rally to the upper side during Asian session today. Now, the data that is going to come out once again could be impactful for me to enable myself understand where the markets could be headed to. Once again, we are looking at CPI numbers, which is Consumer Price Index. This data usually looks at how consumers are spending in a particular economy. If consumers are spending, it means more euros are in circulation. And if more euros are in circulation, it means the currency is expected to be stronger. As a result, you do anticipate for it to reflect onto price action. And also, this is very important. Why? Because this is one of the leading data that the central bank usually look into. Considering we do have the ECB main refinancing operations rate tomorrow, the data that will come out today could impact their decision come tomorrow at exactly 4:15 p.m. Now, once again, if the central banks usually see inflation to the upper side, what they tend to do is hold interest rates or increase interest rates to curb inflation. Basically, they would want to discourage spending and encourage investing. But if they see inflation move aggressively to the downside, people are not spending as much money, they would want to lower interest rates. Basically, they do this to stimulate spending. As a result of that, they're encouraging the consumers go take out loans from the banks so that you can build businesses, put money into people's pockets. Now, looking at silver prices, silver is currently trading at $90 an ounce. We are having a change of character in the markets where yesterday we were identifying this region of resistance around $90 an ounce. We did have a fake out to the upper side. Prices retested on the 50 period moving average, but currently we are seeing momentum to the upper side. We are seeing tensions cool down in the markets currently as we do speak, in terms of when we're looking at Iran, when you're looking at India having a big trade deal that they did come to the table with the United States, whereby there is a deal anticipated to be more than $500 billion as a result of the trade deal. And this means that more money will be in circulation in terms of the dollar. Now, considering you're looking at XAG USD, if the dollar is going to be stronger, you anticipate silver prices to continue moving down. But currently, at the moment, as we are seeing price action, I am seeing prices head back into the golden retracement region, which is in between the 50 and the 61.8. Rofodomi, I have explained how to join the demo contest, but if you go over to the HFM bonuses and promotions, okay, so it's going to be here. If you just click on promotions under the virtual to real demo contest, so we do have the bonus promotion. If you just click on join now, it's going to take you to the right segment whereby you can join. Now, looking at oil prices, oil is currently trading at $63 a barrel, where we did see prices yesterday move to the upper side after massive consolidation. When Asian did move to the downside, the consolidation was quite aggressive, choppy markets to be exact, where prices did consolidate for more than 28 hours, but we had a breakout to the upper side. We didn't have a crossover where the 50 period is now respecting the 200, signaling that yes, indeed, still currently at the moment, we are anticipating more momentum to the upper side, but we do have this gap that was formed on Monday. I want to see how this gap is going to be filled as a result. Currently, we are seeing some sort of resistance on the markets on US oil. Now, looking at OPEC did have their meetings. We are looking at more sanctions of oil from Russia, whereby China and India were buying a lot of oil from Russia and they were not converting it into the dollar. Now, Trump did tariff them more than 20%, but as a result of the deal that they did have on Monday, we are going to see the tariffs being taken down up to 18%, which is going to bring down the tensions that we are anticipating on oil prices. And currently, we are seeing oil being moderately trading around the $60 a barrel. Quite interesting, noting where we have come from. December, we did see prices dipping up to $54 a barrel, but we had massive momentum to the upper side last month, which was the first trading month of 2026. I would want to look at USD Chinese yuan, the dollar against the Chinese yuan. Now, currently at the moment, the Chinese yuan is seen as a safe haven. This is on the daily time frame, whereby we can see the dollar losing quite aggressively against the Chinese yuan. If I can just put it into perspective, ever since April of last year till where we are currently trading, USD CNH has lost more than 6.7% of its total value. Why? Because currently the Chinese economy is improving. We have seen the PMI numbers come out today positive, and it is seen as a stronger asset compared to the dollar. Now, hence prices moving further to the downside. Looking at the 1 hour time frame, not massive momentum in the markets, but once again, I will consider looking at short-term opportunities to the lower side as prices does retrace onto the 50 period moving average, considering the 200 is well above the 50, signaling that yes, indeed, sellers are in the markets. Euro USD, I do have Queen wanting me to look at Euro USD. Have we looked at Euro USD? We haven't. We have looked at Euro USD. Don't worry, these sessions are usually updated on our YouTube channel towards midday. Before end of day, usually the sessions are updated, but currently we do have a double bottom forming currently at the moment. And looking at euro, what do we want to pay attention to? We want to pay attention to the new information that's going to come out. Once again, we are anticipating CPI to come out in the next 2 hours and 30 minutes and counting. And then tomorrow we are anticipating the European Central Bank to come to the table, release their main refinancing operations rate. But what we'll want to pay most attention to is the monetary policy statement, the speech from President Lagarde. We want to listen to her. What does she have to say about where the economy is headed to in the near future? If I can look at indices, starting with the US 100, now, towards New York session yesterday, we did see the Nasdaq aggressively dipping to the downside, but before the markets did close, we did see prices finding a region of support around the 25,000 mark. Now, AMD did release positive earnings, and we did see the markets correct. Currently, at the moment, we are seeing the markets regain what it did lose yesterday. But if you can look at this, we were looking at this information yesterday during the morning market call, and this is why these sessions are usually so important. We had identified the highs and the lows of the day, whereby we had anticipated if prices does break the lows, we would anticipate looking at more shorting opportunities further to the downside. And as a result, prices did respect the analysis of yesterday, and this was quite a decent range considering prices broke that region. It did move down more than 2.23% of its total value as a result. Now, looking at the information today, I would want to see how prices are going to react after Alphabet does release its earnings today. Remember, it is the parent company of Google, and it is the second most valuable company in the United States. Now, looking at US 30, I do have Fred wanting me to look at US 30. So let's look at the CFD, okay? Let's look at the CFD on US 30. Now, yesterday, once again, after massive consolidation, we did have a fake out to the upper side. Prices did move aggressively to the downside, but US 30 recovered more compared to Nasdaq, which means this could be an indicator that the Nasdaq could also regain what it did lose yesterday, considering the US 30 has recovered more than if you can put it into perspective, this is 1.12%, and the dip yesterday was 1.6%. So it has recovered more than 70% of what it did lose yesterday. Considering this information, it is we are about to enter into London session in the next 29 minutes. We do anticipate volatility to come in the markets during New York session if we do get more positive information. Essentially from the ISM PMI, we do anticipate prices of US 30 to move further to the upper side. I would want to look at this zone that we were identifying yesterday. If we do break to the upper side, have a retest on that particular region, the region that was once a resistance could potentially act as support for a further continuation to the upper side. Considering we have the 50 period in between price action, 200 is well below the price action. This signals that yes, indeed, we still have buyers in the market. If I was to conclude looking at the S&P 500 on the indices aspect, yesterday, once again, similar price action. Now, the US 30, the US 100, and the S&P 500 are positively correlated, whereby if one does move to the upper side, there is a probability that the other ones usually do follow suit. Now, looking at S&P 500 and US 100, they are more correlated compared to the US 30. If you look at US 30 and US 100 and US 500, you can see the retracement on US 500 and US 100 are more or less similar compared to the US 30. US 30 did have a deeper recovery compared to the S&P 500. But once again, if we do have prices crossing above the moving average, essentially this is the 200 and the 50 period moving average, I will consider looking at more net long opportunities further to the upper side. Once again, it is earnings season. We do anticipate more companies to release their earnings as time does move on, which is going to reflect on price action. That's going to be it for me once again. Ladies and gentlemen, my name is Ian Joseph Elkington, the market analyst at HFM, and I would want to leave you with the promotion of this call and roll. Beautiful. The score and draw, we do have 24 days and counting for it to conclude, less than three trading weeks to be exact, where there is a BMW 4 Series up for grabs. Not only that, a UK Premier League trip for two, all expenses paid for flights, accommodations, match tickets. Four winners are going to get 55-inch TVs. 20 winners are going to get official EPL jerseys, especially if you are an Arsenal fan right now. And 60 winners are going to be credited $200 onto their trading accounts. Once again, may the pips be with you. I shall see you when you do see me next. About the demo contest, you don't need to have a live account for you to trade. It is once again a demo account that you are going to open, and if you happen to be among the top three, you have an opportunity to be credited. Fred, I salute you too, my brother. I shall see you when you do see me next.